I'm going to start by introducing my esteemed panelists, and then we'll start to get into the subject. So first of all, a warm welcome. Allow me to introduce José Luis Escrivá, the Governor of the Central Bank of Spain. A welcome as well to William Ford, the Chairman and Chief Executive Officer of General Atlantic. Katie Koch alongside me as well, the President and CEO of TCW. Lynn Martin, the President of the New York Stock Exchange. And finally, last but not least, Christian Ulbrich, the Global Chief Executive of JLL. The title of today's panel is Markets Dealing with Divergence. And divergence for us all, I think, has been a key theme for quite a while, particularly coming into 2025. And at the epicenter of that for us all, I think, is US policy and the incoming pro-growth administration looking to run the US economy quite hot. And I think out of everyone I've seen at the forum so far this week, I think you'll probably agree with me, the happiest people are American bankers. I'm not sure about everybody else, and we'll find out how the Europeans feel about things in a moment as well. Something we've all heard on repeat, a key phrase, is American exceptionalism. And I think that's probably a good place to start. Just how exceptional is US exceptionalism? And Katie, we're going to start with you.
Okay, great. So I should probably reveal my biases that I'm American, but I'm going to answer the question just from a capital markets economic perspective. And we were talking a little bit about this in the room before we came out. But America is 4% of the world's population, 20% of GDP, and Lynn's more the expert at this, but about 68% of world market capitalization. So that's pretty exceptional, I think, when you think about share of productivity. A more interesting question is probably whether that's sustainable. And what I'm struck by, I agree that there's a lot of optimism for the US. That's clearly a takeaway from this conference. And the one thing I'm just kind of concerned about is that, yes, I believe all these things. I believe that the US it has been and will continue to be a better place to do business, and we can talk more about that. I believe that there will be deregulation with this administration, that there will be a restart of the M&A cycle, animal spirits will be released. That's all amazing things, and it's very likely that will happen, but the market's already priced up and to the right. And so that actually brings with it a lot of fragility and risk, and not a lot of room for error. So maybe the good news is all that great news will support us at high valuations, and just people may be aware of this, but to be specific, we have a negative equity risk premium right now in the United States. That's one of the reasons that it's 70% of world's market cap. So that's what really gives us pause, is that yes, all these things are happening, but I come from the worlds of money management. And in order for us to make money for our clients, we have to be able to translate that great news into great returns, and that's difficult to do from these valuation levels.
Bill, are things getting harder or easier?
I think they're going to get a lot easier, particularly for IPOs and M&A. One of the things, I'm in the private equity business, and we invest in private markets, but we need great public markets too. And one of the most challenging things we've faced for the last 3 years is really an M&A drought, and a very, maybe the most difficult IPO market we've had for the last 2 or 3 decades, I think. And I think we're going to see a rebound in both. I think, there's sort of a regulatory rollback will be good for IPOs. There's plenty of companies that want to go public. I'd like to say there's a triple win. Companies can access the public markets to raise capital. They can create opportunities for the public to invest in some of our most exciting growth stories. And we can create liquidity for the $10 trillion of private capital that are trapped in or invested in private companies.
Lynn, you wanted to jump in?
Completely agree with what Bill and Katie said.
I thought you might.
It's a great opportunity at the moment for companies to find a strategic alternative that are private. I think the M&A markets are going to heat up because of the regulatory opportunity that exists for this administration to allow the more free-flowing of strategic M&A that has been a bit pent up over the last couple of years in particular. IPOs we're incredibly optimistic about. We've already seen some IPOs. We've got a relatively large one on the road at the moment that we're excited to bring the market tomorrow. So I'm optimistic. The one area that I think all of us in the US are looking at, though, is the deficit, inflation, all of the underpinning economic factors. It does feel as though President Trump is very focused, along with his cabinet, on continuing to showcase the American economy and the growth in the American economy. However, there are some things that needed to be sorted out, particularly inflation in light of proposed tariffs, considering tariffs tend to be inflationary in nature. That's an equation that will have to be worked out. The overall deficit that we run in the U.S., the debt levels that we're running at, pretty high. That's another area that needs to be looked at. However, every incoming administration has challenges to deal with, and this one feels as though they're going to take it and have the economy in front and center.
This is exclusively the American perspective, so let's get the European view.
That's a good
on
idea.
things. Christian, can you share that optimism when it comes to Europe?
Well, from a European perspective, it's probably a bit more challenging than if you were to put it on your, or if I put on my American hat. Europe is obviously in a very slow growth environment. The largest economies in Europe are actually in recession. And we see this bifurcation on the monetary side, where in the US we are wondering whether interest rates can continue to come down or whether they will actually go up again, versus from a European Central Bank perspective, and we have somebody who is probably more knowledgeable to talk about it, but the likelihood that we will see interest rates in Europe to come further down in 2025 is very high, just because of the economic slowness we see there. But you know, going back to those stats around 4% of the population and 68% of the market cap, I mean, think about the opportunity we have if we take that US exceptionalism and use it to increase actually the wealth of the 4%, but also the wealth of the remaining 96%.
Whether that wealth will spill over is quite a question. The incoming president, the new president, Donald Trump, is already threatening tariffs on Mexico and Canada of as much as 25%. I think it was 10% on China. And Governor, Europe's going to get it too, apparently. And you've got your hands on the levers of policy. Does that condition your outlook, that threat?
I think that primarily because because of uncertainty. I mean, we were already with very high uncertainty. The environment was certainly characterized by that factor, and I think the new elements that come from the policies from the Trump administration increases this uncertainty in different directions. So if any, I think central banks will have to operate in this environment. And we have already seen how the Fed have reacted. I mean, when you have this uncertainty, high uncertainty, which is undefined, blurred, it's not clear, but a negative scenario to be identified looking forward, the normal reaction is caution, gradualism, and I think this is what you should expect from central bankers.
What do you think the prudent approach should be as someone who has to manage that uncertainty? Is it to carry on removing restriction? Is that the focus for you now?
Well, we have still a policy in Europe which is somewhat restrictive, and we need to move gradually to a more neutral stance over the next semester or so. This is the central scenario, but at the same time, it's important to stress that we keep optionality, because this uncertainty matters. It matters, and we have to examine very carefully all the incoming information in order to confirm, if they confirm the central scenario, because at the same time there are risks in both directions. So it's two-sided, actually.
Maybe just picking up on that, another way to think about or a different way to think about American exceptionalism is to think about what does it take for a place like Europe, United States to achieve leadership in the world. And I think there's going to be three dimensions that are going to define leadership going forward: technology leadership, energy leadership, and capital market leadership. And I think the U.S. finds itself in a position where, as Katie and Lynn were saying, we've got all three right now. You know, with President Trump committed to sort of reinvesting in the American energy industry, you're going to see significant growth there. Tech leadership has been, I think, pretty firmly established, and capital market leadership, as again, Lynn and Katie were talking about. And I think if Europe, as they think about deregulation and stimulating their economy, they've got to think about how do you create some tech champions? How do you get energy security in Europe, you know, especially given what's happened with Ukraine? And how do you get to capital market union so there could be an alternative capital market in Europe, you know, vis-a-vis the United States?
Well, let's talk about the capital markets issue, because this is a big one and has been for a long time. I think it was Jeff Bezos that said recently that the secret sauce to American success is having the best risk capital on the planet. the best capital markets anywhere in the world. And he was very specific about it. He said, in America, you can have a 10% chance of succeeding, and you can raise $50 million like that. In Europe, forget it. Christian, how do we change that story for the Europeans?
Well, that is not easy to change. It will certainly not be within a couple of years because it is deeply cultural. It has also to do with the question of failing. Are you allowed to fail? In the US, failing is good as long as you tried really hard to be entrepreneurial, whereas in various European cultures, failing means that you have failed, and that is something on your face for the foreseeable future very long. And so that has to change. It also has to do that Europeans tend to focus very much on the risk before they focus on the opportunity, versus the US is focusing on the opportunity versus the risk. So we will work on it, and I'm sure that Europe and the EU will try to do their very best to accelerate it, because it's obviously right when you look at the amount of startups and innovations coming from the US is outpacing Europe massively.
Lynn?
It's the risk culture that we have in the US. Risk at times breeds innovation. And I can't think of a country that's been more focused on bringing innovation to market. You look at all of the great innovations that have happened over centuries. They've happened in the US because you can get that access to capital, as Bill was saying.
Governor, don't you think we're skeptical of success as well in Europe? We don't just punish failure, we punish success. That's the big issue, I think, for a lot of people. Sitting in America, and I've lived in New York for a long time.
No, I think it's, it's clear cut. I mean, this is a major.
But does that start with you and the team? Does that start with policymakers, officials? There is a phrase, allow me to complete this, because the Chinese will replicate America's innovation, and the Europeans will always regulate. How do you change that culture?
Through incentives. I think that incentivizing risk-taking, I mean, if you ask me, it's primarily cultural, so it's not easy to deal with it with norms, with policy instruments, but still I think there is room here and there, if we go systematically, to see how the legal framework is defined and try to change a number of things in order to be able to reward risk-taking and create the incentives for people to take. I think that is one element in which more can be done, because in Europe there is excellent human capital, but we need to reward more those who are excellent. We have to reward talent. We have to reward more those who really innovate. And while this should be done internally in the firms, it's not yet a problem for the public sector, it's a more general problem. I think in the public sector, in a number of areas, we could really do a number of things in order to lead this cultural change.
Casey?
So I'm really interested in that comment around the culture and the need to embrace risk-taking. I agree with that very much. I would just also add one of the advantages that the U.S. has that's actually hard to replicate is the ecosystem between the universities, the venture funds, then these big tech companies that go public. It actually doesn't really exist anywhere else, and that's a very formidable advantage for the U.S. continuing to maintain the leading edge of technology. But actually, if I look, and I love the way that you framed that, Bill, and if you look across the primacy of technology, energy, and capital markets, I think it's also true that one of the greatest vulnerabilities for the US is in the tech vertical, because of course we don't control access to chips, which is the foundational technology for all the things we're talking about. And even this announcement, which is exciting because we know we need the infrastructure to build AI, and we've announced $500 billion with Stargate.
Yep.
Sorry, these things are all happening this week, so I'm just making sure I get the right names and dollars.
Yeah.
All right, so, and then someone tweeted that there's only $10 billion spoken for. I'm sure we'll figure it out eventually. But actually, all of that's not solving the fact that we can't manufacture at the leading edge in the US. And I think that's a great vulnerability for us.
Well, and that's been an area of like energy protection and going back to Bill's 3 pillars. Energy security has been a big focus, and it is continuing to be a big focus of America. I agree with you that that is a potential vulnerability, but even the Inflation Reduction Act, the CHIPS Act, started down the path to try to get control of that in the U.S.
There is an additional privilege that we haven't talked much about, the privilege of behaving recklessly when it comes to fiscal management in the United States.
Oh, yeah.
There are things that America can do that the rest of the world cannot. And as they do those things, they seem to be putting additional pressure on the Europeans specifically. I can pick out the UK and more recently France as well. Countries that are losing fiscal space. They don't have the luxury of thinking about another extension of tax cuts that could amount to 5 trillion US dollars this year. Can I get your thoughts on that bill? The unique privilege of behaving recklessly with the US debt.
Well,
will we retain that privilege in America?
Well, I think maybe coming at it a slightly different way, and it is the fundamental question, because despite all the tremendous optimism you're hearing about the U.S., I think the one worry that I have is the level of national debt and the level of deficit spending. And despite that, we do have the privilege of being the reserve currency of the world. At the same time, the capital markets at some point in time could start to have a problem with the level of debt, because you think about the level of interest expense to GDP, interest expense to the total government budget, needing to refinance $60 to $70 billion per week. Katie, I'm sure, knows about that in the Treasury market. These are very, very big numbers, and the numbers are deeply influenced by where the interest rates come out. So if rates don't start to bend down, if they stay flat or go up, these problems are even exacerbated. So it is a privilege, but it's also, I think, probably the biggest risk to this whole story is if you can't bend the yield curve, or at least start to bend rates down, it could have significant implications. And it's one of those things. It's not a problem until it's a problem for the markets. But at some point, the markets wake up and they have a problem with it. And then again, our ability to absorb significantly higher rates right now is not high, in my view.
Governor, how do you feel about those issues? It feels like America can stomach 4% interest rates, maybe 5% interest rates. If there's a moment of reckoning to be had in America at some point on the horizon, maybe we're close to having one already in certain European countries. How much fiscal space do they have left? Is the pressure on you to do the heavy lifting?
Well, the European framework is much more complex. It's more rule-based than in the US. Dealing with it has been always a challenge in the past because of the complexity and the governance of the monetary union. But seems to me that by comparison, the situation in the US is much more severe and concerning, no doubt. And I think that maybe the adjustment process may take longer, maybe different in Europe, but in the US, I mean, in a way or another, there will be adjustment if debt is perceived non-sustainable over the long term. And I think this is a problem now. I mean, my sense by looking at the market is there's too much complacency. And actually, during these days, it reminds me somewhat this sentence by Chuck Prince by mid-2007, while the music plays, we dance, 2007. And this sentence reflects two things: short-termism and benign neglect of risk and imbalances that might be building up. And fiscal is one, but there might be others. So I think this is a good reminder that in these high valuations here and there, across a lot of asset class. So I think we need to be, as central bankers, we need to be very cautious, because we have seen in the past that the combination of these elements might end up very badly. And market corrections can be very severe. Fortunately enough, I think because of the previous crisis, I mean, the potential for systemic risks is far more contained, and that's good news. But at the same time, losses could be substantial here and there.
Katie?
I think that, I mean, I agree with you, and I think there's a lot of people that are concerned about debt sustainability, so it is an exorbitant privilege to be the world's reserve currency. That is for sure true. We, at TCW, we manage $200 billion globally. It's mostly in credit markets, private and public, so we do have a lot of treasury exposure, and I'm sure people are aware, but while we've been cutting rates at the front end, right, because that's what the Fed's trying to control, the term premiums brought up the back end of the curve, and people, that's telling us something, which is that there is a constituent in the market, I think, that is concerned about sustainability. And even if you just make it a very simple, like if the US was if we're looking at the US as a company, here's a company that's levering itself up with an uncertain growth outlook that's alienating its buyers. right? Like that I think that's some of what you're seeing in the long end of the curve. But you also said the right thing. You don't know what's going to be the catalyst that causes it to break. But I think it is something important to look at. And I just end by saying, you were starting to point to this, but this what I said before about the fact that everything's great, but it's all priced in, it's up and to the right. What we should be asking ourselves, I don't really have a good answer for this, I have a hypothesis, is why is the market at record valuations if there's so many things that we need to fix and deregulate? And maybe it's actually because we've borrowed that growth through debt and inflation of asset prices. And so that's something that I don't have an answer for, but that I think a lot about.
Bill, you got the answer?
Yeah, I think just to add to what Katie just said, I think the thing that we should reflect back on is the importance of Secretary Bessent's incoming Secretary of Treasury Bessent's policy. He's talked about the 3 threes, and I think they're really important. Get the deficit down to 3% quickly. That would inspire a lot of confidence in the market, especially the Treasury market, and probably the yield curve to some extent. Generate 3% growth, because the reality is we're not going to inflate our way out of this. We've got to grow our way out of it. And so maintaining 3% growth, I think, is critical. And the last, those are the 2 main points. And his last point is, 3 billion barrel equivalents of additional energy produced by the United States, which would be a stimulus to our economy. And if he does those things, I think he will create significant confidence in the markets. But I think that very quickly the attention is going to turn to him and say, can he really get us down to 3% deficits, again, relatively quickly?
Governor?
Yeah, my sense is the following. When markets are under this very optimistic mood, they tend to filter out new elements, at least for some time, in order to confirm this optimistic view. And they tend to neglect elements that might be at odds with this view. Let's take, for example, the expected policies of the Trump administrations. Certainly some of them are growth enhancing, but not all of them are by any means growth enhancing, unless some key elements of economic theory are to be reconsidered. I mean, tariffs are not growth enhancing, certainly not for the global economy, not for in the long term from the US. I mean, weakening institutions, we know economic institutions, agencies, we know that the countries with higher economic institutions and institutional framework tend over the long run to perform better. Deregulation, broad deregulation of any kind. I mean, we have seen costs from deregulation in the past, very severe ones. So in a way or another, I think we will need to come back to all these policies to see how they are going to materialize, because there is a lot of uncertainty, and to reconsider the extent to which really are so growth enhancing as the market is counting now.
Christian?
I think we should also consider the foreign exchange currencies and what they do to that whole situation. I mean, one of the reasons why President Trump is considering to raise tariffs is because he feels that the trade deficit of the US is reflective of an unfair situation in the world. And with these high debt levels, which we are seeing on potentially higher debt levels, I cannot see an environment where we see a rebalancing of the dollar against the other major currencies in the world, because we will see a higher interest rate gap going forward, especially between the euro and the British pound and other currencies against the dollar. So I think this is all very much connected. We need to get the deficit under control. We need to see where the exchange rates are so that we can tackle the trade deficit, which the US still has.
The title of this is Divergence. That word is in there. I want to talk about that with you. Are there limits to that divergence? We've already seen a huge run-up in the US dollar. We've seen rate differentials gap out. The governor's thinking of cutting interest rates sometime soon. Chairman Powell does not have that luxury. He may have to reconsider cutting interest rates at all, and that was a point we made earlier on this panel. Are there limits to the divergence? Are we seeing any stress in foreign exchange, any stress in fixed income?
Well, that's almost a philosophical question, where there are limits to divergence. I think they are within a society, but they're also within trading partners. If some are doing really, really well and others are doing really, really bad, that generally doesn't work for the long term. So we have to create win-win situations. And going back to that stat that we have about 300 million or 3% of the population sitting in the US, we have about 5.5%, 6% of the population sitting in Europe. When you put those together, that's still less than 10%. Mm-hmm. And so it makes a lot of sense to me if at least as a start, those two trading regions are finding common ground to create a win-win situation and tackle the problems, rather than going now into a significant divergence, which is not necessarily happening, but there's a risk that we see that divergence widening in 2025.
The elephant in the room there as well is China, and we haven't talked much about China. The economy's challenged. Certainly the relationship between the United States has been challenged for a number of years now. The Europeans have managed to manage that situation by sitting on the fence, trying to please the Americans and keep an economic relationship with the Chinese at the same time. Do you think they'll have that luxury in the years to come?
Well, listen, diplomacy and trying to find your way is a talent which is mostly pronounced in smaller countries. There are brilliant examples of those countries who do that really, really well, because they have to. They cannot survive on their own. And so I think we will see this kind of balancing act going forward, not only from European countries, but also from other countries. I mean, when you look at the Middle East, there are a lot of countries in the Middle East who are doing extremely well, balancing incredibly smartly between the Western world, the US world, and the Chinese world. And so I think in a world which is polarizing into kind of two superpowers, what's left for the others, they have to do that.
We need to talk about this relationship as well, because there is a board member of ByteDance sitting around the circle with us. But we should probably talk about that. How are you navigating that issue, personally?
Well, it's a complex one, but I have to say we were very grateful for President Trump intervening to keep TikTok alive and available for 170 million American users, so that's good news. And I think he's made it clear he wants to negotiate with the company, and he wants to engage with the Chinese government. There was a productive call on the topic last Thursday between President Xi and President Trump. And we're optimistic we'll be able to make a deal with the Trump administration that provides the level of national security that the U.S. wants, but also is consistent with how China feels about it.
Some people have said there might be more bark than bite. Is that how you view the incoming administration when it comes to issues like this?
I actually think Trump is going to surprise us to the positive on China. I actually feel he's hired, he's appointed advisors who are fairly hawkish in their position to China, but with President Trump, everything is personal, and his diplomacy of President Xi will be personal. And I know for a fact he talks very much about how he respects him as a leader, and he'll want to engage directly. So I think he might surprise us. And I took it as a very positive sign in his inauguration speech. There was no mentions of Chinese tariffs. There's mention of some other geopolitical things, but he actually did refer to that. And in some of his early commentary, he said he's going to take some time to think about what the tariff structure should look like. And I think that's a direct result of his relationship with Xi Jinping. And so I have a sense of greater optimism. We're starting from a low base, but I think we might be surprised to the upside.
Lynn, you met the president recently. Mm-hmm. Do you share that optimism?
I do. Alongside meeting very many members of the incoming cabinet and knowing many members of the incoming cabinet, he's surrounding himself with business people and people who understand the political framework. So I do think that he's going to rely on strategic advisors, very much like business deals, and approaching a lot of these big issues with perhaps a little less emotion than we've seen from the past, but understanding that pragmatism here may be the best option.
He surrounded himself with American CEOs at inauguration, some of the biggest tech CEOs on the planet. There are some cynics out there, some skeptics who suggest that maybe they're after something. Other people I've met with this week suggest that's just a celebration of everything that's great about the American economy. Bill, do you think there will be favorites? Do you think there will be favorites in America, national champions, whereby other companies outside of the United States, particularly in Europe and maybe Asia, they won't be able to get access to the US market?
I don't think so. I think what President Trump is really going for is two things. He wants to really help the American worker. I think he's genuine in his desire to uplift the American worker. Second, he wants to stimulate investment in the United States. I mean, a lot of this about even his tariff policy, you can see tariff in three windows. You can say, is it a revenue generating exercise? Is it an investment exercise? Or is it a trade deficit exercise? And I personally think it's not really about revenue. It's about stimulating investment back in the U.S. And it's also about getting people to buy more American product. And Christian talked about that a little bit. I think that's what he's after, and I think that's really what his agenda is going to drive. Now, he wants to engage business for sure. He wants them to increase investment. He's celebrated some of these significant investments announcements that have been made recently, SoftBank, Stargate, as we just talked about. But I think it's more driven by those two factors.
Lind, you agree?
Yeah, absolutely. I mean, even if you look at his comments around keeping TikTok alive and running in the U.S., it sounded very much like a CEO, and the way a CEO thinks about a business, the profit and loss. There's significant costs that he has to deal with, but he knows he's not going to cut his way to greatness in America.
Yeah, part of the dialogue with the TikTok leadership team, the president, was about $40 billion of investment in the United States in data centers, et cetera, in the next 4 years. 12,000 jobs. They already have 6,000 jobs. They'll double that to 12,000. So it's very much of a business dialogue, as Lynn was saying with him about, hey, these are the good things that they're going to bring to the United States.
It doesn't sound like capitalism, though. I have to ask you this, and I don't want to make this the TikTok interview. This session is about something else. But I do want to press you. Capitalism, to me, would be someone looking for a buyer because they owed it to their shareholders to find a buyer. ByteDance didn't do that. ByteDance was worried about what the Chinese government might say. And what's interesting for me, looking at how this relationship is playing out, is the Chinese government's got to say, the incoming president's got to say. That doesn't sound like an open market to me. Does it sound like one to you?
Well, I think for better or worse, and I would probably say worse, because of the profile of TikTok and the scale of TikTok globally in the U.S., it has become a bit of a political football. It has become the manifestation of the tensions between China and the U.S. Because when politicians want to talk about a company that can represent the problem of the two countries confronting one another, about data security, about software security, what a perfect example. It's 1.2 billion users outside of China, 800 million users inside China. It's known to just about everybody. And so I think people latched on to it as, again, the manifestation of a series of issues related to really national security issues, when maybe they're not even directly relevant to TikTok, but again, it's something that's top of mind.
We'll have a longer TikTok conversation later.
Yes.
I want to give the audience an opportunity to ask questions. If you have any, please just raise your hand and we'll move bring the microphone to you. I think I've got one behind me if you want to bring the microphone over. If you don't ask questions, I will make this a TikTok interview.
Okay. Please ask questions.
The gentleman first, please.
Thank you. This is Calvin Guan from Caixin Media. Since this could be a critical issue that may impact market sentiment, Mr. Ford, could you please share more about TikTok's solutions short of divestiture that you mentioned yesterday, and what's the probability
You can't
of
do
this?
that.
Thank
So it's
you.
become a TikTok interview.
Jonathan wanted to do that.
Go on, Bill.
I'm trying to think about your question. I mean, look, the objective of the company is for TikTok to continue operating in the United States, consistent with the U.S. law, and there is a law in place that is designed to protect national security. The company believes that there are a number of options short of selling the company that can meet the, I think, understandable national security objectives of the U.S. government, and that's what we are ready to engage with the Trump administration on. Candidly, we really had very little engagement with the Biden administration on the issue, and Trump from the very beginning said we're going to sit down and talk about this and see what we can figure out. So, I think I have a real sense of optimism that we will find a ground where we can meet the legitimate national security needs of the United States, but continue operating and not have to sell the company.
Any other questions? Just looking around. And I think you guys have a think. I'm going to follow up with you. You mentioned the Biden administration. How bad was it? 3% GDP.
I'm looking at my other U.S.
Record high equity market.
Francie.
How bad was it?
Well, let me give you one example, speaking openly. You know, I look at the CFIUS process, and our international friends who are in the room very often have to engage with CFIUS, which is a rule that basically evaluates acquisitions in the U.S. by foreign entities, and that department, that center in government is normally managed by the Treasury Secretary, and they coordinate all the different agencies of government to make sure that all the issues are vetted. And that's been the way it's been done since CFIUS was started over 25 years ago. And it was I would say, a fairly efficient process, and it was economic and national security focused, but companies could get decisions. During the Biden administration, I think maybe because of lack of interest on Secretary Yellen's part, the Department of Justice took it over. And their view was to look at everything through a political lens, to say, what does this mean for American politics vis-a-vis foreign countries? Is this a political friend or a political enemy of the United States? And so it wasn't being viewed from a business point of view with the same criteria. And I mean, that's just one example. So again, what does that do? Lots of people outside the United States who have legitimate needs to make investments or acquisitions in the U.S., they hold off because they say, I have an uncertain CFIUS process. I have a very elongated CFIUS process. Some of them are going on as long as 2 or 3 years, these investigations. That's just one example of where the business community said to themselves, you know, wait a minute, this is just too uncertain, takes too long, too political. And I'll turn to my other great panelists, but one more example.
Sure.
You can't, I don't think you can overstate a specific merger that went on, which was the Tapestry Capri merger. Mm-hmm. 2 American fashion companies competing in a very competitive global market for fashion. And they're 2 public companies, they agreed to merge. It was very hard to really see any antitrust issue on any normalized antitrust grounds. But yes, it would create a bigger company for sure. But the worst part was that the litigation from the FTC against the company took 24 months. And so can you imagine, those of you who run public companies, to be trying to manage a company when you've had 24 months of being under litigation? Your shareholders are asking them, what's going to happen here? Are you a merged company? Are you a separate company? What are your earnings going to be? And that was just another example where, and a lot of, I think, CEOs just said, I'm just not going to engage with this administration. I'll wait to see what happens next because I see what I'm in for. And it had a real dampening effect on a lot of business activity.
Lynn, did it slow down business for you?
A little bit. The IPO markets were pretty quiet, but I can't necessarily attribute that to an administration. I mean, there's a lot of geopolitical tensions that's caused volatility in markets. Interest rates being where they are, that caused some challenges in markets. But what you did see, because of the volatility in markets, you did not see strategic exits from some of the private companies on the M&A side, as Bill was just saying, because a founder has 2 options. They can either tap the public markets or they can look for a strategic to acquire them. Because of all the uncertainty that was promulgated by the FTC, Department of Justice, around the certainty of getting a deal done, that caused people to sit on the sidelines.
Did the Europeans feel the same way?
Well, I would say we have seen pretty much around the world, certainly in Europe and also to some degree in the US, a massive amount of regulation which has come in from any government, and maybe a little bit more during the time of the last government in the US. And I can understand it because the world has become incredibly complex, and especially with technology and data coming into play, it's even harder for governments to kind of keep control of what's going on. And so they try to regulate. The trouble is that they put more and more regulation in, and they don't take any regulation away. And that makes it really, really complex. This is not a particular US issue, it's an issue everywhere. And so I think we would all encourage governments to deal with that red tape, deal with bureaucracy, and make it just easier to deliver valuable outcomes for the overall society through great businesses.
Any questions in the audience at all? Got a couple of minutes left. This gentleman here.
Thank you. Francesco Ciccato from Barclays. I just wanted to ask a question taking you back to the fiscal side. And Governor Escrivá mentioned confirmation bias, and we talked a little bit about exorbitant privilege. At what point does exorbitant privilege stop being a shield for a lack of fiscal orthodoxy in the world's reserve currency? That's to any panelist who wants to answer it.
I think if you get a failed treasury auction, that would be a good place to start. But I just think it's very, so one thing to think about is on your 3, 3, 3, and 3, to get the current account deficit to 3%. I'm listening to you say it, I heard him say it, I'm listening to you say it. It's like, how are we actually going to do that? That's the cutting of entitlements. That takes a political will that we don't currently have in the US. So I'm just saying that to say I don't see a solution, a realistic solution. Maybe they'll come up with one. Please feel free to disagree.
No, I think it's the big question mark for the market. If I'm watching markets, I'm saying, show me evidence that you can really get us there and still accomplish your tax cut. Because Secretary Bessent, when he was having his confirmation hearing, was very clear. He supports maintaining the tax cut.
So if he maintains the tax cut, we have entitlements, we don't have a way to get there, so you need bond vigilantes to come out, which, again, I think some of that is coming through in the long end of the curve, but you need something to really break for then everyone to realize that will take the equity market down, it'll start to destroy wealth, and that'll focus people on the issue.
And that's where geopolitical could come in, given some of the large acquirers of U.S. treasuries.
But I think, sorry, go ahead.
No, sorry. No, I was just about to say that I suggest to read carefully always what the Congressional Budget Office produces, because they examine these issues about debt sustainability and long-term challenges for the U.S. finances in a very careful way, independent way. So read them, because they are very good.
I think that's a good moment to leave things, unless you've got a final word, anyone around the circle? Guys, thank you very much. Appreciate it. And to everyone in the room, thank you.
Thank you.